Hello and welcome everyone. My name is Vadim and today we're going to talk about NIO. And more specifically, we're going to talk about why we think NIO stock is going to make a substantial move in the short term. So stay tuned till the end of the video. We are going to explain how we would play NIO stock in the next couple of months. So NIO stock has dropped about 45% in the last year when the whole S&P was up 12%. Not a very good sign. If we're looking at Q1 results, they're not good. We're going to talk about them. And the whole situation with China and US reminds us of cult classic from 2004 called Mean Girls. So if we're looking at Q1 results, it was bad. It was really bad. NIO lost about 36 cents per share. Its revenue was 1.37 billion when the analysts were expecting 1.5. The stock dropped 10% in one day. Everything was bad and horrible. But we think there is a play here because right now NIO stock is really undervalued. If we're looking at all of the financial results, first of all, let's take a look at price to sales. Price to sales ratio of NIO is about 1.14, which basically means that the market right now thinks that NIO stock is dead, the company will never be profitable, and it's never going to grow. Market cap of the company right now is 11 billion. Out of that, if we take a look at the net cash and net debt, half of these 11 billion is net cash. So half of the market cap is just simply cash that's sitting there on company's books. Moreover, if we take a look at the company assets, they are 4 times its market cap. And we're not talking about assets like some virtual stuff. We're talking about manufacturing company. They have real assets like factories and production. They can sell that and will be worth more than their own market cap. What it means is every single piece of good news for the company will skyrocket its stock, and we think we have good news for this company. If we look at the Q1 results, again, they were bad, really bad. The company delivered around 30,000 vehicles, but its Q2 guidance was to deliver about 55,000. Yeah, almost twice as Q1, and that the sales will grow over 100%. What we need to remember is that EV market is seasonal and Q1 is the worst quarter of them all. Q2 should be much better. Actually, we have a bit of insider information here because earnings results are released once every quarter, but Chinese EV companies release their delivery numbers every month. So for Q2, we already know the first 2 months and the numbers there, and the numbers are good. Actually, NIO already delivered 36,000 vehicles. That's more than the whole Q1, and it looks like they're going to make this 55,000 deliveries until the end of Q2. If we assume that price to sales is going to stay, well, maybe not the same, maybe not 1.14, but about the same, and the sales are going to jump 100%, it's safe to assume that the stock price is going to jump too. Again, I'm not saying it's going to jump 100%, but it's going to make a substantial move. Now, before we continue with the analysis of NIO stock, please don't forget to subscribe to our channel and press a like button and leave a comment. If you like this analysis or not, maybe you would like to see some other stock being analyzed on our channel, please leave a comment and we will get to it. By the way, one more reason why we think NIO stock is going to make a move is analyst expectation. If we take analyst ratings as they are, they don't mean a lot. Right now, for example, analysts have 8 buy ratings, 9 hold ratings, and 1 sell rating for NIO stock. What's interesting is kind of the average target price for NIO stock they are having. And the average target price is $6.66, which about 35-40% more than the stock is valued right now, with one of the analysts actually predicting that the stock will get to $10. Before we get to kind of my ideas of how I would play the stock, let's talk a little bit about more long-term holding of NIO. So NIO as the company is not a very good one, is not a very stable one. The company burns cash, burns it a lot. The company had to issue debt in November last year, about $1 billion of debt, and the company doesn't have a lot of cash right now. So please beware because it looks like NIO is going to issue either new debt or issue new stocks fairly soon. Second of all, the situation in China is not wow. I mean, COVIDs, lockdowns, the whole financial situation there, it all affects the middle class's ability to actually buy NIO's vehicle, and the biggest market for NIO is still in China. But there are actually some good news for long-time holders. First of all, NIO got approved to build a third factory in China, which will boost their production to about 1 million vehicles a year. Second of all, China right now issued a $830 million grant for solid-state batteries research and development, with NIO being one of the beneficiaries of this grant. Again, this could boost NIO's technological edge. And the third reason is, I have no fucking recollection what the third reason is. What was it? And the third reason is that NIO has a new brand called Onvo, the brand for mid-class segment, which can potentially boost market share and revenue streams for the company. Now, let's talk about how would I play this stock. So we know that good news are coming when the Q2 announcement will be made. So for now, it looks like we can take NIO stock right now, put a pretty tight stop loss of around 15-20% of the stock right now, and expect a move. What we want to see is that the company delivers the result it promised to deliver and actually gives a good guidance for Q3. Again, Q3 for EV markets is seasonally a good quarter, so I think the guidance of the company will be pretty good. By the way, I said tight stop loss of around 20%. Please make sure you are risking what you actually can afford to risk. So if 20% is a lot for you, take a small percentage of your portfolio and you can make a play with it. By the way, the whole disclaimer, this is not a financial advice. I'm just saying how I see this play. If you are investing in NIO and you're investing for the long term, beware. EV market is being oversaturated and it's changing a lot. Right now, I can see new auto salons are opening all over the country, and for example, new brands which I never heard of are appearing on the roads right now. So the whole market is changing, the whole market is very dynamic, and I would say pretty oversaturated right now. So the chances of NIO becoming this global brand and taking over the whole EV market is pretty slim. So I personally would not invest in NIO, a substantial portion of my portfolio, but as a short-term play, it seems like a reasonable idea. That's all for now. Guys, if you have any ideas for further companies to take a look at, to evaluate, please write us in the comments. It will be much appreciated. That's all. We'll see you in the next video. Take care.